Well, financial inclusion means having access to different financial services from payments to savings, credit and insurance to an individual. And inclusive economic growth essentially is that whatever drives and whatever the growth in the economy is, all the segments are included. There are a lot of research out there which suggests that two are very closely linked. For example, McKinsey Global Institute did a study, and Pakistan was one of the countries. The study suggests that if we are able to digitize and financially include all the individuals in the financial ecosystem, then it will result in the creation of almost 4 million new jobs. And at the same time, it would result in an increase in the GDP by 7 percentage points, which translates into roughly about $36 billion additional GDP by 2025. Now, that's a substantial number. And then with individuals having access to financial services means that they're able to build their history, they're able to access all the services which are currently not available. So it's critical that while the country is putting in capital to grow and achieve economic growth, that the individuals are also financially included, especially women, which is very critical for the growth of this country. Well, over the last decade, you'll recall from the history that in 2009, precisely about almost a decade ago, Easy Paisa was launched as a digital service. And these mobile financial services have been expanding rapidly. Right now in the country, there are 39 million individuals who have mobile wallets. At the same time, all the traditional commercial banks have also launched their applications and also provided internet-based services to customers. So there has been a substantial growth. We have also seen that the fintechs have come up in Pakistan, started offering their services. So there has been a healthy growth in that area. Now, the role of Karandaaz in this whole space, and we started supporting the market from 2014. Our key driver has been to provide the essential infrastructure, which can unleash the growth further. Secondly, to help in policy and regulation area, so that there are conducive policies. Thirdly, to try different innovations with market players. So they can try different products, they can have more human-centric products to offer to the customers. And then digitization of major cash flows, which will lead to increased uptake of different use cases. Karandaaz has been working with government entities, with private sector entities to create that ecosystem. I would say that Karandaaz is present in microfinance area. We have invested almost 15 million pounds in equity in Pakistan Microfinance Investment Company, which is a wholesale microfinance platform connecting capital and credit markets to microfinance institutions and microfinance banks. In addition, we have provided them subordinated loans so that they can support MFIs effectively. So I would say that Karandaaz is present in a substantial way in supporting microfinance because of the size of the total portfolio that we have invested in microfinance space. Well, the linkage is very clear. The microfinance institutions have the customers, they understand them, they have worked with them. However, the channels to reach those customers are very expensive. And hence you will see the operation cost of microfinance institutions being relatively high, which translates into higher interest rates or higher markup for the microfinance customers. I think where the fintechs can play a role is to reduce the operational costs and to provide those efficiencies which then can be transferred and translated into lower markup for the customers, for the end customers. So there's a natural synergy. And the second area is that fintechs can build upon a lot of data which is available with these MFIs and also with MFPs to come up with different products in order to increase efficiencies and especially do different segmentations and support customers according to their very specific needs. So the two must work together. I think what's important is to understand what is meant by payment infrastructure in the first place. Payment infrastructure can mean different things to different organizations and different entities. What we understand payment infrastructure is an infrastructure which will enable you to do switching from one account to another account, which normally is something which is done among the banks which are regulated by the state bank. Now, microfinance institutions where microfinance is one of the use cases. And what needs to be definitely done is to digitize them. What needs to be done is aggregation and also provision of all the reporting. And in that area, microfinance institutions can come together and leverage the infrastructure which is developed by entity rather than building their own infrastructure independently, which will be inefficient and which will translate into higher costs for the customers essentially in the end. The drive should be towards achieving the efficiency through economies of scale, which can come about only if we are able to bring together a number of players and work together. Well, financial inclusion sector includes entities which are engaged and involved in increasing financial inclusion. So it includes banks, it includes regulators, it includes support entities like Karandaaz who are working in this space. I think the key thing is collaboration. It's very important and critical that all these entities, the kind of work they're doing is that they work together. They can leverage and build upon the work that is being done by each entity. Then the second message would be that they should not build closed loop systems. The system should be open, they should work together to make sure that if any infrastructure is built, then that infrastructure is open to everybody in order to participate. I think the third key message I would like to say is that whatever intervention is designed, the end customer is kept in mind. So it should be human-centric focus on the interventions that are designed. So these are the key three things I would say are critical to achieve financial inclusion.